AGNC Investment Corp is a well-known monthly dividend-paying REIT because of its high dividend yield of over 14%. But is the high dividend payout and low share price worth the risk? No, it's not. Thank you for coming to my talk today. Okay, in all seriousness, let's analyze the REIT. I do want to make it clear that I am not going to tell you to buy or sell a specific stock. I will provide you with the information and you can decide if it fits your portfolio. I will also provide you with my thoughts on this stock as well. But before we continue, my name is John and welcome to Talk Finance. I would really appreciate it if you took a second and clicked that like button. You would be helping out the channel, and as a thank you, here's a picture of a cute hedgehog wearing a crown. Okay, let's get started with its current share price, which sits at $9.68 a share, with an incredible payout of over 14%. AGNC was founded in 2008. They are an internally managed real estate investment trust. They invest predominantly in agency residential mortgage-backed securities on a leveraged basis, financed primarily through collateralized borrowing structured as repurchase agreements. It is important to note that this REIT bases its growth on leverage. It says it right there in the description. Why is that important? Well, the market is currently experiencing increasing interest rates, which a lot of the real estate market is feeling. We know the real estate market has been steady at the moment because there isn't many people buying since interest rates keep rising, just as there isn't many people selling, therefore keeping prices elevated for longer. But that also affects a company who counts on leveraging their current portfolio to most likely acquire more mortgage-backed securities, which they now have to pay more for. You could say, hey, maybe that's why their share price is what it is, because of the higher interest rates. Therefore, prices should go up once they lower those interest rates again. Well, perhaps. In the past 1 year, they have dropped more than most REITs, but that's also the year most rates have gone up. So for a company that counts on leverage, it wouldn't be fair to judge them only by the 1 year mark. So let's look at the 5-year mark. When the market was going crazy and everyone was buying stocks, that period started right after March 2020. We can see that even after they recovered some of their share price, they still didn't reach their previous high that they had reached before the March of 2020. They are down 48% so far in the past 5 years. And if we look at their share price since inception, we can see they are down by 51%. But although that share price is not good and hasn't seen any price appreciation, is the high dividend payout still worth the share price depreciation? In this article titled AGNC, the 14.8% yield paid monthly could get fatter. They say that the internally managed REIT invests primarily in agency RMBS, which stands for Residential Mortgage-Backed Securities, on a leveraged basis through the use of repurchase agreements. The portfolio was valued at $59.5 billion as of the end of its last reported fiscal 2022 fourth quarter, and agency mortgage-backed securities formed $39.5 billion of this. AGNC also held an $18.6 billion TBA mortgage position. In case you didn't know, TBA stands for to be announced. Most mortgages in the United States are securitized through the agency mortgage-backed securities market. This trading convention significantly improves agency mortgage-backed securities liquidity, leading to lower borrowing costs for households. The article continues by saying that AGNC formed a tangible book value of $5.7 billion as of the end of the fourth quarter, around $9.84 a share. The article also seems to agree with what I mentioned earlier, since they also say that the impact of rising Fed funds rates have been marked and the corresponding rise in primary mortgage rates has formed a structural headwind to AGNC's book value. So we know that AGNC is tied to the current rate hikes or rate cuts, but even so, its share price doesn't show much historical strength, so will the share price increase? Well, they will most likely increase again, but by how much? Will we see price appreciation in the future that makes the dividend worth it? Analysts are saying that their 1 year price target for AGNC is currently between $10.50 a share and $12 a share. But here's where your portfolio future goal comes in. Are you looking for that dividend to pay you an income right now? Are you looking for share appreciation while they pay you dividends, or both? Let's look at their dividend history. When they first started paying dividends, they started paying anywhere from 22 cents a share to as high as $1.25 a share, but they weren't really paying a monthly consistent dividend yet. But in 2015, they started paying their dividend consistently every month at 20 cents a share, and it's been dropping ever since to what it is now, 12 cents a share. So I will not be buying AGNC even at this price, or knowing that even in the near future the share price could rise to at least the $10 mark. And if rates start getting cut, then we could see it go higher, but the risk is not really worth the reward, at least not for my portfolio. There are so many other REITs that might not be paying 14% dividend yield, but have price appreciation. So that 14% yield is not really 14% once you factor in what you are losing in the share price value. Now, you might say, hey, I'm not looking to sell the stock. I just want the dividend payout. And that is fine. But do you really want to pay for a dividend that has been cut multiple times instead of increased? No, you wouldn't want that. You want a dividend payer that has either dividend growth, share price growth, or maybe a stable dividend with a stable share price. So it might be slow, but at least you can count on it. Either way, investing puts you in the right track to retiring early, and if you don't want to retire early, at least you can have some financial freedom to choose. What are your thoughts on AGNC Investment Corp? Are you buying any shares? I know I'm looking at buying other dividend paying companies out there that are way better than this. If you found this information useful, then give the channel a like and subscribe. See you on the next one.